Good morning, treasurers. This is your host Parthesh Shah from Fintech, and you are listening to Night Snippets. Here is what you need to know before going into trade for 10th January 2022. In the international market, US treasuries are facing a perfect storm that could send benchmark yields to their highest level in almost 2 years. Reasons to fear: number 1, more hawkish Federal Reserve. Number 2, surging inflation, not so transitory anymore. And number 3, deluge of supply. US 10-year continued to rise, closing at 176 percentage points, shying away from 177 percentage points, which was previously seen in March 21 and pre-COVID Feb 2020 high. On the other hand, Friday's non-farm payrolls saw addition of just 1.99 lakh jobs, whereas estimate was for 4.22 lakh jobs creation. Unemployment rate came down to 3.9% from 4.2% in November 2021. Pre-pandemic unemployment rate was 3.5% in February 2020. In a neighboring country, Canada, inflation for November 21 was seen at 4.7%, which was highest since 2003. So the transitory inflation has now become not so transitory, and Omicron strain has put pressure again on supply side. Crude oil market is trading at $81.75 per barrel. Short-term range for crude is 80 to 84. In the currency market, dollar index DXY is at 95.78. Today's range 95.57 to 95.90. USD CNY or Chinese yuan is at 637. USD INR with a low of 74.41 closed at 74.31. Support at 74.05 and resistance at 74.40. Trading strategy: as NFP numbers are out and DXY has lost 96 levels, it will take some time for the INR bears to come and hit hard. For now, INR will trade in the range of 74 to 74.50. Indian inflation data will come this week, and that will define the next course of action for USD INR. In the domestic market, yields rose as traders dumped their holdings after RBI devolved a large sum of 574,2026 at auction on primary dealers on Friday. 563,2026 closed at 590 versus 588 the previous trading day. 2 basis points yields rose. 610,2031 closed at 654 versus 653 the previous trading day, more or less pretty much flat with 1 basis point rise in yields. And 667,2035 closed at 702 versus 7 the previous trading day, increase of 2 basis points. 7th Jan 2022 GSEC auctions, the Friday's auctions, 456,2023 cut off at 494 with additional rupees 500 crore green shoe option exercise. 574,2026 cut off at 595 with rupees 4,387 crore devolvement on primary dealers. 667,2035 cut off at 7 with full 9,000 crore acceptance. 699,2051 cut off at 721 with full 7,000 crore acceptance. In short, 574 GS 2026 devolvement on primary dealers is a sign that RBI is not ready to let yields go past 595 for 5-year paper, but exercising rupees 500 crore green shoe for 2023 maturity, RBI is showing comfort with short-term yields rising. OIS curve, 1 year pretty much flat at 438 versus 438, 2 year also flat at 492 versus 492, 5-year OIS came down at 558 versus 562. Seems the 5-year OIS is overdone and no more bets as traders are waiting for the reversal. As far as the trading strategy goes, keep an eye on 610,2031 near 657. 657 yield is a major support for 610,2031 for HFT traders. 654 is also attractive with short-term gain and averaging possibility. Strategic buy: we give a strong buy for 574,2026 near 598. Keeping in mind the liquidity and the short-term yield movements, buying a 5-year GSEC at 598 or SDL depending on your portfolio mix at 630 is a very good buy. Even if repo moves by 100 basis points touching 5% in a year, 100 basis point spread in GSEC for a 4-year maturity, which is rollover, is not a bad idea at all. That's it for today. See you tomorrow with the new episode of Night Snippets.